Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. And we are into the midweek of the trading session. And the last 2 days have been quite a roller coaster for the benchmark index, which is your Nifty 50 index, given that we have started the week quite on a tepid note. But yes, even today, the trends on the GIFT Nifty has been suggesting a lower start for our own markets. If you look at the pre-open rates suggest that Nifty has declined by about 50 points as of now. But yes, the global setup, that remains largely positive because we did see that the US markets have ended higher overnight, and we saw that Dow Jones and S&P 500 hit new lifetime highs itself. Now, the comments from the US President Donald Trump keeps rolling in, and in yesterday's White House speech, the president did say that he sees Venezuela to give up to $50 million worth of oil to US, and he also plans to control that oil so that it benefits the people of Venezuela and US. So yes, this is an important development, and we'll be watching out whether or not the takeover of US indeed takes place of Venezuelan oil assets going on the back of this. But yes, on the back of this, we did see oil prices nudging lower. Brent prices fell by about 1% to settle at $60 per barrel on the supply risk and certain uncertainties on the back of geopolitical tensions itself. Now, we also had the White House official also saying that Trump has been discussing ways of acquiring Greenland, and that has received quite a bit of condemnation from the European nations, asserting that the Greenland belongs to them. Individually, we even had European leaders making stronger statements. For instance, Denmark's Prime Minister said that any US invasion of Greenland would spell an end to NATO And even Germany's foreign minister has indicated that that US will be at war with Europe if it grabs Greenland, asserting that NATO members will be having an obligation to defend Denmark if it was attacked by the US. So yes, that's also an important development to track. But yes, on the back of all these geopolitical tensions, we have the safe haven demand once again in the interest, and we have seen that gold prices have been hovering at record high levels, and silver prices too have hit fresh lifetime highs. Silver, for instance, so far this year itself has surged by about 15%. After last year, we did see that the precious metal has seen a record-breaking rally itself. But yes, we'll understand how all of these cues will impact our own markets. We have some experts which is lined up in the show, and we'll be understanding what your trade position should be and discuss your stock-related queries as well. So keep dropping them on our live feed as usual, and we'll take them up in a bit. But let's move on and take a quick check of the top headlines this hour. Stocks on Wall Street closed the session higher, with Dow Jones surging 500 points and the S&P 500 hitting new lifetime highs. Asian markets remain mixed as investors await the inflation data from Australia. Meanwhile, the GIFT Nifty is indicating a lower start for the Indian markets. US President Donald Trump says Venezuela to give up to $50 million barrels of oil to the US at the market price, and the resultant money will be controlled by him to benefit the people of Venezuela and US. Crude prices react to this news and edge lower. US President also wants Republicans must win the 2026 midterm elections, or else he will get impeached by the Democrats. On India, he said that the Prime Minister Narendra Modi is not happy with the tariffs imposed on the country for the purchase of Russian oil. Oil prices have extended losses after US President indicated that Venezuela would send oil to US. Meanwhile, the gold prices inches to near record highs as geopolitical tensions boost safe haven demand, and silver prices also hit new all-time highs. And the government is all set to release first advance estimates of GDP for FY 25 to 26 at 4 p.m. this evening. This is the first formal step towards making a budget, wherein RBI has expected GDP to come around at 7.3%. All right, in yesterday's trading session, we did see that the benchmark index has extended the losses for the second consecutive day. We did see Nifty slipping below that 26,200 odd levels itself. So yes, this could be some consolidation before the market gets the real action of the third quarter results, which rolls out from next week onwards. But yes, yesterday, however, it was the heavyweights and large caps that contributed most of the declines. Reliance Industries alone was responsible for about 100 points cut on the benchmark index, which is your Nifty 50. While while HDFC Bank shares have also been declining for about 2 straight days, and the stock has slipped also below that 200 DMA levels. So yes, we'll be watching out how both of these heavyweight counters behave in today's trading session. But yes, apart from this, the broader end of the markets, which were resilient on Monday, did see some limited action yesterday because both the mid caps and small caps have cooled off in yesterday's trading sessions. And amongst the sectors, it was the IT that has reversed some bit of a loss, and pharma stood out, while oil and gas stocks still felt some pain in yesterday's trading session. But yes, going ahead, we'll be having more third quarter updates, which is trickling in. So individual stock reactions will be in focus. We'll be discussing about Titan, Godrej Consumer, which have come out with their third quarter business update. But yes, coming to the cash flows position of where we stood yesterday, FIIs, they bought stocks which was worth about 142 crore rupees in the cash markets, and DIIs also bought stocks which was worth about 1500 crore rupees in the cash markets itself. Nifty put call ratio dropping to about 0.92 from 1 in the previous session, and the stock that continues to be a part of the F&O ban, that is your SAIL and Sammaan Capital. But yes, none of the stocks have been out of the list of the F&O ban as of now. But yes, the pre-open rates definitely suggest that the markets are headed for another negative start for today. If you look at Sensex down by about 190 points, Nifty is also down by about 23 points as of now. But yes, on that note, let's quickly get on board with our technical expert of the show. Joining me is Jay Thakkar of ICICI Securities. Jay, good morning, and wishing you a very happy new year. I mean, it's our first conversation this year itself, but yesterday we saw Nifty breaking below that 26,200 level. So do you expect this consolidation to continue, given the pre-open rates are also indicating a weak start today?
Very good morning to you, Lovisha, and thank you very much, and wish you and the entire team of Money Control and all the viewers of Money Control once again a very, very happy and a prosperous new year. Well, after making a new lifetime high, Nifty again corrected, and I would say that what the recent trend has shown is that Nifty makes a new lifetime high, takes off his previous swing high, and then corrects by almost 60-70% of his previous move. This time around, again, if you see the previous highs of 26,300, 26,320 or something like that was taken off, made a new lifetime high of 26,373 and has started to correct again. I think it may find support around the levels of 26,000, which has the highest pull base as far as the January series is concerned, 0.1. Below 26,000, you have a risk of Nifty slipping back to its previous levels of 25,700. So the broader range continues to be 26,300 to 25,700, and that was the range for December series as well. Nifty could not take off Nifty couldn't take off this range very convincingly. It just made a lifetime high and fell back into this range. So this 600 points range is still intact. Within that, you have seen sectoral journey, wherein you saw that stocks like Reliance, HDFC fell yesterday very sharply, and few of the stocks have been making lifetime highs, or many of them are making lifetime highs, and you have seen a recovery in mid and small cap indices as well. But one thing to notice is that the India VIX has gone up now about 10. I think that generally what we have analyzed is that prior to the budget, there has been from the December close. Okay. So 31st December close to 31st January. 1st January, 31st January, generally you see 20 to 25% kind of a jump in India VIX ahead of the budget. Right. And rising VIX may lead to falling index 0.1 most of the time generally. That is what we discussed. Otherwise, what can happen is due to short covering, because we all know the FIs are index short. Okay, percentage wise as well, not contract wise much, but percentage wise still they are quite low. So due to short covering, which we have already witnessed in stock, if at all there is a huge short covering further from here on as well, that could lead to India VIX up. Okay, so if India VIX is up and market is up, can be only due to short covering. Otherwise, generally market goes down. Right? That is what it is. But what we anticipate is that from this 600 points range, there is very much a chance that we see a breakout prior to the budget. Right? So either we are at 26,500 or above ahead of the budget, or we are below 25,700 and much below that ahead of the budget is what we expect.
Okay, got it. Ahead of the budget, that's what you're saying. But since we're discussing about the budget as well, Jay, I mean, how do you find the railway stocks at the current juncture? Because we did see some run up, in the recent days. I mean, anything that you're liking from the space, be it from even railways or defense for that matter?
See, we have already started. I mean, the short covering started with these sectors only. right? I
Hmm.
mean, you see, the recent lows of 25,700 from there, where we have seen the short covering happening one by one, sector by sector. These were the two sectors, along with the power finance name and power sector, all of them, few of the infra names, they have started witnessing short covering. And last was Nifty Reality, right? Recently, until day before yesterday. So I think that yes, these are the flavors ahead of the budget, which could see volatility increasing, which could see larger swings, which could possibly see further short covering for sure. But structurally, if you ask me, still there is not much of evidence whether these stocks have bottomed out for the medium term point of view. There can be a short term bottom because of which you see short covering, a good bounce back since they have corrected quite a lot. But does it signal medium to long term bottom? I would say still not much of signs of that. So if someone is trading into these names, it would be from the point of view of short covering, from the short term point of view, hence be hedge your positions because volatility is still further likely to increase.
Okay, some volatility can be expected. But Jay, what about metals? I mean, yesterday once again up for the sixth consecutive day. How are you finding the trend going ahead? Because you've seen several of the counters also hit fresh record highs, be it your Hindustan Copper, Hindalco, all of them were at lifetime highs yesterday.
Cyclical is the sector metal, and you saw this post-COVID huge run up in metal stocks, right? I mean, a phenomenal rise is what we have seen at least in 2021 in metals, or maybe from the end of 2020. Then there was a down cycle or consolidation for a couple of years, 22, 23 until 24, and then since then you've seen again, metal stocks have been rising since past couple of months. Definitely, they are in a very structural uptrend. Okay, very strong uptrend, and because of the global commodity prices going up as well. And I don't see this stopping anytime near from the medium to bottom. Short-term corrections due to profit booking cannot be ruled out, right? But I don't see they topping out immediately. So I think one sector which is very much, two sectors rather, I would say, which are very much clearly in an uptrend are metals and auto.
Metals and auto at this point of time. But yes, what about IT? I mean, ahead of the Q3 results, yesterday a little bit of a reversal, but TCS in particular has seen some good buying interest in the past couple of sessions. I mean, in the past 5 days, it's still, I mean, marginally in the green as of now. So, how are you placed in, and of course, the entire IT theme as of now?
As a disclaimer, I would say that we have a buy recommendation on TCS for a target of 35, 50, 3600, or maybe above that, maybe until 3700. Okay, that is what we had released in our yearly quant outlook as well, and it was discussed on money control as well, right? That is point one. Point two, we had seen a couple of months of bounce back in IT stocks. Probably, in October is when they made a low. So November, December, we saw a good bounce back. But since past 2 weeks, and this is the third week, is what we are seeing Nifty IT being under pressure. Correct. So we had a significant move from 33,000 approximately to 40,000 levels approximately. So that is almost 20% kind of a jump in Nifty 80 index from the bottom. Okay. So when you have seen a good first up leg due to short covering, in which still you don't have much of the shorts covered, and then you are seeing correction, so there might be some consolidation for some weeks or months. So you've seen 20% move in 2, 3 months. It is one quarter, so one quarter can be negative or sideways move. And thereafter, you will see one more leg up, which I think should be the final leg up if it is the short covering or the short term uptrend only. If it has to be a larger trend, then let's see. That only time will say. But as of now, it seems that some consolidation will happen, and post that you will see one more leg up, is what I'm anticipating. So I don't see 33, 34,000 levels on Nifty IT breaking. But at the same time, 40,000 also is not likely to break on an immediate basis. So Nifty IT might just, consolidate within, say, 34 and a half to, say, 38 and a half. So this 3 to 4,000 points is what consolidation I'm expecting at least for 1 or 2 months until you have a positive surprise from the results.
Okay, okay, got it. That's what we need to watch from the IT space as well. But yes, I mean, Jay, coming to the Nifty realty space, that is seeing a little bit of a buying interest. In the past 5 days, the index itself has gained by about 5%. Do you expect this trend to sustain, or how do you expect this to pan out, given they've started this year at least on a positive note?
No, I would say it is just short covering. It is not on a very much. I'm not much positive on Nifty Realty. I mean, if at all there are few stocks to be selected among the Nifty Realty, it would be Phoenix, which is clearly in an uptrend, and second would be Oberoi because it's this. we did not see short build-up out here. So whatever fall we have seen is mainly due to long unwinding or profit booking. So relatively less leveraged stock are Phoenix and Oberoi. These are the two preferred bets within the Nifty Realty, and rest all the stocks I would like to avoid.
Okay, got it. We'll get your view on Lodha because they've given out their Q3 business update. But before that, let's take a quick check of how the market is open right now. It's flat with a negative bias, 63 points downtick coming in for there. It slipped below that 26,150 odd levels itself, nearly 0.2% decline coming in for the benchmark index. Sensex is also open with about 200 points cut. And if you look at the Nifty midcap index, flat but with a negative bias. And for the Bank Nifty also, it has seen a little bit of a breather with about 0.2% decline. But yes, the Nifty midcap slowly inching into the green, marginally in the green as of now. But yes, let's take a check of the Nifty small cap index. Both of them have opened flat but with a positive bias as of now. We'll watch out whether or not they are able to extend this recovery later in the trading session as of now. But yes, let's take a check of how the India VIX has been doing, given in the past 3 trading sessions, India VIX has already risen by about 10% itself. But yes, India VIX once again with about 1% gains. Coming to how the sectoral indices have been panning out, Nifty IT index has opened with a positive bias, 0.2% gain coming in for the IT basket. Nifty auto index has cooled off a little bit, 0.1% decline. Nifty pharma index were flat but with a negative bias. On the other hand, if you look at Nifty metal index up for the 7th consecutive day, like we were talking about earlier, 0.2% gains coming in from the metal basket itself. But yes, how the Nifty 50 gainers and losers look like at this market, let's take a quick check of that. If you look at the gainers, the Titan has been doing well, nearly 3% gains coming in for the counter on the back of its third quarter business update. Interglobe Aviation also seeing some buying interest, 0.5% gains coming in there. HCL Tech with about 0.5% gain. Tata Consumer Products, SBI, Axis Bank, all of them have been open in the green. So yes, IT stocks is once again dominating the Nifty 50 gainers list as of now in the open rates. On the flip side, you can see Cipla seeing a little bit of a cool off, 2% decline coming in for there. HDFC Bank extending the loss to about the third consecutive day for this week, 1% decline coming in for this heavyweight private lender. Shriram Finance also seeing a decline of about 1%. Tata Motors Passenger Vehicle, Maruti, both of these auto stocks is seeing a bit of a cool off, nearly a percent decline coming in for there itself. But yes, like we were talking about the Nifty Realty basket, we did see Lodha Developers coming out with its third quarter business update, where the company has reported about a 25% year-on-year rise in pre-sales, but collections have fallen to about 17% on a year-on-year basis. Now, the stock has been reacting well to it, nearly 2% gains coming in. But we also had a positive brokerage note by Jefferies, where they're saying that the pre-sales growth was 22% above their growth estimate. And they believe that large new projects can definitely drive better margin growth ahead. And that's the reason why they've given out a buy call. Jay, I mean, of course, you're quite negative on the Nifty Realty basket. But for Lodha, I mean, today it's seeing some bit of a reaction. And do you believe that this momentum can continue?
See, Lovisha, as I said, that it is purely short covering. So short covering moves can definitely come, but with that, I would not like to say no one can go long on this. Definitely, it's a huge jump, I would say, but still would like to avoid.
Okay, all right. Still like to avoid Lodha Developers. All right, let's talk about Titan because it's one of the top Nifty gainers. And we did see that yesterday that the company has given out its Q3 business update, where they have released numbers of domestic business growth of about 38% on a year-on-year basis. International business has surged by about 79% on a year-on-year basis. And the stock has also in the past 1 month has seen a good gains of about 9% itself. And however, we did see a neutral brokerage note coming in by Citi, where they have given out a neutral rating because of the lower studded mix. They believe that the standalone domestic jewelry has given out a strong double-digit growth, but the studded mix has seen a decline, and they estimate about studded ratio decline of about 200 to 250 basis points of decline on a year-on-year basis. But today the stock is doing well, 3.5% gains on the back of its positive Q3 update. Jay, how does it place? How do you place on Titan? I mean, of course, in the past 1 month, the stock has received good buying traction. Last year also, the stock has been done phenomenal. What's the next target levels that you're watching out for?
Yeah, sure. 4,400 is what we are eyeing for Titan. Titan has been more slowly and steadily moving up. There has been a technical breakout from a sideways consolidation, and there has been long build up here as well. So I think that 4,400 levels are quite likely until 4170 levels are held. So short term to medium term trend on Titan remains bullish.
Okay, okay, all right, got it. But let's talk about Kalyan Jewellers as well, because the stock has been receiving good traction on the back of its business update itself. We can see the stock has been seeing about good gains today. But yes, Jay, coming to you for Kalyan Jewellers, how does this stock look like from a near-term perspective? Today it's seeing about nearly 1.5% gains.
Kalyan Jewellers, I think, is just witnessing some short covering. I think, in the near term, it should be avoided because we have seen the stock rallying quite a lot, and thereafter we have seen some profit booking happening as well. And from here on, I think there could be some consolidation happening in this stock. So I'm not much negative, but not even much bullish. So some time for consolidation is what the short-term indicators are pointing out.
Okay, all right. That's the view for both of these jewelry maker stocks. But yes, let's take some viewer queries that is dropping on our live feed. The first query coming in from Sita Ramulu has been asking the view on HDFC Bank, given that it has been falling, and where he's asking whether it's the right time to enter this particular counter. Jay, what's your view? 3 days of consecutive fall now, and it's been dominating the top Nifty 50 gainers list. What can we watch out here? Sorry, losers
Well,
list.
see, HDFC Bank, it is a question of, right? So HDFC Bank is what I think, Lovisha, is mainly falling due to, I think the change in weightages. Otherwise, the business update relatively was positive. So I think that in the short term, there could be some further consolidation or correction. So one should be avoiding, one should not be catching the quality falling knife. Let it consolidate. Let the index, manage, what do you say, weightage overall complete because from next 1 2 months you will be seeing the bank nifty. In fact, the weightage overall will be 45%. No one stock will be more than 20%. Not no more than three stocks will be more than 45%. All of this is leading to some a consolidation or some what do you say churning within this sector. Once this is complete, I think you can take a call on AGS Bank thereafter. Apart from the investment point of view, I don't think there should be a problem. From a trading point of view, you're asking me, I think one should be waiting.
Okay, all right. That's the reaction from HDFC Bank. And of course, today also the stock has been on a sliding trajectory. But yes, let's move on and take another viewer query. We have Satya who's been asking the view on switching from First Source Solutions to Oracle for this year. And he's asking that Oracle has already fallen quite a bit and First Source has been stagnant. So what's your view for the near term? Jay, what's your view? I mean, First Source has been oscillating about that 300 to 350 odd levels. But First Source, Oracle has seen about a decline of about 17% from October peaks.
Of course, OFSS has, one for FSL has fallen. I think, see, as I said, IT is likely to consolidate for some time. So I would be avoiding IT as of now, at least until, 40,000 levels are not taken off on the index. These stocks have seen a significant, I would say, bounce back and last couple of months. So sectorally, if you have to see, then I think, we should be avoiding this, looking at the very selective pockets where you can be seeing short covering. Okay, that would be more important. If you see the overall trend in the PSU banking stocks, I mean, that's been going up. So that is very clear trend. Metals, there is a very clear trend. Select auto names, there is a very clear trend. There is where I think one should be writing the momentum rather than, now after 2 3 months when everyone started saying IT and now jumping into it. Now IT won't run is what I think for a couple of weeks because now everyone knows about IT. Since because and it was not a say when everyone knows about anything and if it is in a bull market, it still continues to go up, like metals or auto or something like that. But something which has seen a good short covering, and because of short covering, you have seen a bounce back. I think once there is a consensus, I think one should be avoiding that sector.
Okay, all right. This is the view coming in for both of these counters and of course the overall view and perspective on the IT sector. But yes, let's move on and take another viewer query. We have PKB Sahai who's been asking the view on buying Sagility and whether or not it's a good price to start buying this particular counter at the current market price. Right now the stock has been trading with about 0.3% gain, and in the past 1 month also the stock has done quite well. Jay, the stock is back above that 50 mark, but would you believe that it can cross further about 55 odd levels?
Well, I think that yes, it can. So, I think Sagility relatively has really performed quite well in the short term. We've seen a trend going up in the near term, so it is likely to inch towards the levels of 60, 65 at least in the near term. On a downside, I believe that 47 is a very clear support. So, until those levels are held, one can continue holding this stock.
Okay, all right. That's the view coming in for Sagility as well. Hold on the stock. That's what the advice has been. All right, let's take another viewer query. We have Samir Nayak who's been asking which one is structurally good on charts from the medium to long term perspective. That's your BSE, CDSL, and NSDL. Of course, NSDL is a recently listed stock, so the data could be limited here. But what's your view, and which one are you liking from a near term perspective amongst the three, Jay?
I would like to avoid this space completely. CDSL, NSDL, BSC, all of BSC definitely could see some uptrend. I think the stock has relatively seen an underperformance correction. So if I have to prefer, it would be BSC and not the depository names.
Okay, all right. That's the view coming in for the capital market theme as of now. A complete avoid, so to say. All right, let's take another viewer query. We have Shweta Naidu who's been asking the view on Ambuja Cements, and she's saying that she's bought the stock at about 572 odd rupees, and she's asking whether it's good to hold or is it time to shift to Ramco Cements. Of course, the stock has been trading near her buying price itself, and in the past 1 month, we can see that the stock has gained by about 7%. But yes, let's take a look at how Ramco Cement has been doing because today the stock has been down by about 0.2%. But in the past 1 month, the stock has also received good buying traction. But yes, from a near term perspective, which one of the two would you prefer, Jay?
Ramco is a non-FNO stock, but as a disclaimer, I would say that I'm holding personally that stock, bullish on that stock, but it's a non-FNO stock, so I would not be able to comment on that. I'm personally holding it as well, but it's been long. But as far as Abuja Cement is concerned, it's within the FMCG, within the FNO space, and I think it's looking positive. In fact, we are bullish on the cement space. Is what we are releasing our quarterly, yearly outlook, quant outlook as well. Bullish on Dalmia Bharat, bullish on Ultratech Cement, and bullish on Ambuja Cement. I think post GST, what has happened is you have seen a consolidation happening in the cement stocks. They didn't move much, right? You saw, auto moving much. They really showed the benefit of the GST on the demand, right? And the cement space and the FMCG did not. Now they are moving, right? So I think this space, after some profit booking consolidation, is likely to see further up.
Okay, all right. That's the view coming in for both the counters, Ambuja and Ramco Cements. With that, let's move on with our next viewer query. We have Naveen who's been asking the view on Hindustan Copper, and he's bought 500 shares at a buying price of about 525 rupees, and he's asking whether to hold or exit this particular counter. Of course, he's bought it recently, but Hindustan Copper, the stock has been doing quite well. Today also the stock is up for the fifth consecutive day, and the stock did hit an all-time high, and of course the 16-year high itself for this particular counter on the back of good copper prices. Jay, what would you suggest? I mean, he's seeing a little bit of a profit, but would you suggest him to hold or exit at the current levels?
I would say hold. No, I would say hold. Overall rally is still there, and I think the way the copper prices are heading, of course, they see there is no sign of reversal or consolidation, so it would not fall 20-25% in a day. If that happens, definitely is a complete move. Book profit. Otherwise, it will give you time to book profit, think that whether the rally or the uptrend is over, whether the bull market is over, and all of that. So in that, we might miss 5-7% on the upside, but in the fear of missing that 5-7% on the upside, but miss even if there is a 20-25-30% further rally. So I would say that keep trailing your stop loss and holding, hold out. Maybe Hindustan Zinc or Hindustan Copper.
Okay, all right. Hold for Hindustan Copper, then that's the suggestion. All right, we have RJD who's been asking the view on Hathway and Den Network for a long term point of view and whether it's a good time to accumulate the particular counter. Today, the stock is seeing a little bit of a decline, 0.5% cut coming in for this particular counter. But yes, going ahead, how would you suggest investors to approach this particular counter? Jay, I mean, if you look at the stock in the past 1 month, the stock has been in a flat to positive bias, but the stock has been on a sliding trajectory if you look at from a 6 months perspective.
Um, Hathway Cable is non-FNO stock and it's relatively way low cap. I would say a small cap or maybe micro cap. I don't track this stock much. I would say honestly, And since it is a non-FNO stock and it has fallen quite a lot, and it's one thing which the overall sector I don't follow. So I would not like to, able to comment on it, but I would like to say that overall, telecom space is bullish, and if I have to look cables or telecoms or all of that, because digital network and all of it. So going forward, I think that one stock which is likely to continue its uptrend is Indus Tower. So Indus Tower looks positive after a huge consolidation. We have seen a breakout with a long build up as well. So I think Hindustan Tower can see further 30-40% upside from in Indus Towers can see further upside of 30-40% from the current levels from the short to medium term point of view, but would not be providing a clear view on the health of cables.
Okay, all right. Indus Towers looks attractive from the telecom space. That's the view then. All right, let's move on and talk about Jubilant FoodWorks because the stock has not been reacting well to its Q3 business update. The revenue has risen by about 14% on a year-on-year basis. Like for like, growth has also been by about 5%, and the company has added about 114 stores in the third quarter. But the stock has been trending or spiraling downwards. Jay, what's your view for Jubilant FoodWorks? Of course, we have seen that recently in the QSR space of Devyani and Sapphire's merger, but is that weighing in on the counter?
See, Jubilant Foods is likely to consolidate. It might bounce back from these levels, maybe to 560, 70, or maybe even that from under 600 because it has fallen quite a lot, and there has been some positive divergence on the daily charts. And but see, this stock is likely to consolidate for a couple of quarters now. You've seen a good up move, and now it has gone into that consolidation mode. And I think it is likely to continue for some more time as well. So this overall theme of QSR business, or maybe the restaurants and all of that, post COVID, they all flourish quite well. Maybe hotels, stocks, and all of that. Now, see, after rallying and discounting all of this, are you going to discount the similar kind of thing now going forward immediately? So it seems difficult, I think. So hence some consolidation cannot be ruled out till the time new demand overall evolves. That would take some time. So all of them have gained quite a lot, I would say. Hotel stocks or all of these stocks. Now it's time for some consolidation.
Okay, all right. That's the view for Jubilant FoodWorks as well. But yes, we have another viewer query by Shweta who's been asking the view on Bajaj Finance, given that she's bought the stock at about 1,078, but the stock has been trading below her buying price itself. What's your view, Jay? I mean, should she hold the counter or should she exit? And, she's asking whether it's good to hold or buy Nuvama at the current levels. What's your suggestion?
Yeah, Nuvama is likely to consolidate. I mean, this is one stock which did not fall much, I would say, but overall sector, see, anything related to capital markets, I mean, it's going to be very stock specific from here on. Alright. Okay, so we discuss about BSE after some consolidation, it might go up, but if you ask me about CDSL or NES, NSDL or K Fintech and all of them, I think it's time for consolidation or some profit. Same with Nuvama. Nuvama is likely to consolidate. I don't see. I mean, whether it is Nuvama or Angel, all of them are likely to consolidate. I mean, you have seen a good run up, and now see index specific only or stock, the volume specifically only if you're not seeing much of the movement in the index or the participation in the index or the market, then how would you, be very much positive as you were from, the 2021 rally to, 24 rally. Okay, so that period is gone now. So till that period is not coming back, how are they going to gain the market share and all of it? So I would say that it would take some time for consolidation. Once you see a clear breakout, once you see a large participation from the FIs and all of that, thereafter this sector will again come back into limelight overall.
Okay, all right. All right, we have another viewer query right now. We have RP Kar who's been asking the view on Bajaj Auto on how this particular counter looks like from the current levels
Bullish.
and of course from the short to medium term perspective. Jay, I know you're quite bullish on the auto space, but for Bajaj Auto, I mean, the stock recently hit 52-week high levels, and how do you expect the momentum to pan out going ahead?
Bullish on Bajaj Auto. As a disclaimer, we had recommended this to our clients. As a disclaimer, I would also say that, yesterday we also advised to book profits, but then our view is still bullish for the target of 10,000 plus or 10,500 as well. This has been one stock which has relatively underperformed its peers, still has shorts. We have not witnessed overall short covering. In fact, most of them have seen long build up. So there's much more left in Bajaj Auto. The numbers have yet not come now. as other auto names numbers have been coming. Maybe due to product mix, or maybe because of the pricing, positioning, branding, marketing, all of which I think Bajaj Auto will definitely look into it now, and going forward they would like to see the market share increasing and not decreasing, and then giving away to the peers overall, and all of that, because there is definitely a pressure on the management as well now to prove it, and because of the underperformance, and based on the numbers. So I think that from your on the outlook should be positive only. I think whatever the management does from your on should be positive. I think so, to increase the market share, and hence Bajaj Auto looks positive. I think the way the numbers are showing from a data perspective, as far as the derivatives data are concerned, short covering is seen. 9300 is what I see as a very critical support. Till 9300 levels are not broken. 10,000 to 10,500 levels can't be ruled out. Recently, it has given a breakout from an ascending triangular pattern as well, which is a bullish continuation pattern.
Okay, all right. That's the view for Bajaj Auto. You're quite bullish on the particular theme. But anything apart from that, if you had to highlight your top picks as of now, Jay?
Marico. Marico. As a disclaimer, we have recommended this to our clients, and I think Marico is one stock from the FMCG which has seen a good long build up, has seen a good breakout from a huge consolidation. The copra prices recently has fallen by 30% also as well. So I think this is one stock particularly which I am bullish on. I think that can see definitely good levels on the upside. At least I see 820, 850 levels minimum on the upside. I don't see this stock go down going below the levels of 740. So Marico is one stock which I'm absolutely bullish on from the FMCG name. One thing I would say that from the another stock from the FMCG name could be Colpal, which has huge shorts but have not shown a clear sign of reversal. But any good day, or one, you would see once you get a trigger. So I'm not giving a buy on that, but I'm just giving a view on Colpal that it's likely to see a good huge short covering. That and DMart. So keep a watch on those two. But Marico is definitely a buy with a stop loss of 740, targets 820, 850.
Okay, all right. Marico with a target of 820 levels. All right, Jay, with that, we have to let you go. But thank you so much for your time and answering our viewer queries so patiently.
Thank you so much, and thanks for having me on your show, and looking forward for more such interactions as well.
Yeah, thank you, thank you. All right, let's take a quick check of the markets before we move on to our next guest of the show. You can see that the Nifty has remained sideways at this point of time, still below that 26,150 odd levels. Sensex is also down by about 100 points, and the India VIX still remains at a little bit of marginally higher and elevated levels as of now, showing in that the markets have not totally digested the geopolitical tensions as of now. But yes, the IT stocks continue to do well for the second consecutive day. Nifty IT index showing some bit of a recovery, nearly 1% gains coming in from this particular index. Bank Nifty, however, has slipped in the negative territory. However, the metals have been doing quite well, up for the 7th consecutive day. So all in all, you can see that the sectoral picture remains quite mixed because apart from metals, it's the pharma stocks also which have seen a bit of a buying interest, up for the second consecutive day. But yes, with that, let's quickly move on to our next guest of the show. We have Siddhartha Khemka, Head Research Wealth Management at Motilal Oswal Financial Services, joining us. Siddhartha, good morning and wishing you a very happy new year. But markets, once again, they have been consolidating at a higher range. Would you say that investors are now watching out for the third quarter results for further action going ahead?
Good morning. Happy New Year to you, Lovisha, as well as the entire viewers of Money Control. If you look at with the end of the calendar year 2025, markets kind of consolidated, touched a new high and consolidated those at those levels. I think in the near term, there are several triggers. First of which is definitely the Q3 quarterly results. The business updates have started coming in, and they have been pretty much better on the expected lines that we were expecting things to improve in the second half of FY26, and Q3 will see a much higher growth in terms of corporate earnings. Beyond that, there are several global geopolitical issues which have been kind of getting into the bringing in volatility into the Indian markets. I think that is something which keeps the investors a bit on the cautious side. FI selling has come down a lot. I think last few days we have seen marginal selling, and some days of December we saw them buying as well. So I think even if the selling abates, I think that could be also a big trigger, because the DIIs or the domestic inflows continues to be very strong. Valuations have come down, and with earnings recovery expected from Q3 onwards, I think market should see consolidation, and we should see a lot more stock specific action, at least in the near term.
Okay. But Siddhartha, what kind of earnings growth are you expecting from the third quarter? We've seen the last 2 quarters of single-digit earnings growth, but do you believe that the GST benefits can start reflecting in the numbers?
So that is something which is clearly visible. Some of the consumer companies that have come out with business updates have been pretty strong, be it Marico, be it Goodrich Consumer, which came out recently. I think overall corporate earnings, we are expecting about 9 to 12% earnings growth for the Nifty 50 as well as our coverage universe. So that will be a big leg up from the 3 to 4% earnings growth that we have seen in H1.
Okay, got it. But Siddharth, what about, from a sectoral perspective, where are you seeing the leadership to emerge in the third quarter? Because for second quarter, it was the oil and gas. And now with further lower crude oil prices, does it bode well for the OMCs and going ahead? And of course, do you believe that the sector can outperform too this time?
So yeah, I think oil and gas, it's a bit volatile because of the geopolitical issues, the crude oil prices that thankfully remains subdued or benign, at least as we speak. So I think oil and gas could continue to report strong numbers. What we are expecting, some of the sectors in terms of good numbers, we are expecting good numbers from auto. We have seen the monthly sales data that has been pretty strong in the festive season. That will be one sector where we will see a very strong growth. Telecom is another space where Bharti continues to report strong numbers. Some of the others have shown improvement, so that will also lead to a very strong growth. Pharma, healthcare, consistently, if you see mid-teens kind of growth, that will continue. Cement, we are seeing some recovery. Metals will be another pack where we could see some recovery. I think so. Those are some of the sectors which could do. Metals, as I said, marginal recovery. Cement, marginal recovery. IT will remain subdued. So that's the kind of sectoral flow that we are seeing. Banks, again, NBFCs will report strong numbers. If you see commercial vehicle financing, gold financing, those are very strong. The consumer lending companies, that will see some recovery, and banks will see NIMs bottoming out. The business updates from some of the large banks have been quite impressive, and I think Q3 will mark the phase for the banks to start performing from here on.
Okay, got it. But among PSUs and private sector, if you had to choose between the two, how would you, choose about it? Because we have seen that PSU banks have seen good traction. Private lenders have seen selective traction going ahead. I mean, we have had some Q3 business updates which are pointing out to elevated LDR ratios. So does that make you a little cautious on private names?
So I think PSU banks, they all around strong performance, good growth in lending. NPAs have been pretty controlled. Valuations are comfortable. So I think PSU banks, that will continue to outperform. Our preferred choices there, SBI among the large caps. We like Canara Bank, Union Bank. These are some of the other PSU banks that we like. Within private sector, I think the view is a little bit mixed. What we are seeing is that ICICI Bank could continue to report very strong numbers. That has been our top choice there. HDFC Bank is showing a strong recovery in terms of deposits growth, lending growth. The credit growth has also been impressive, what they have reported in the business updates. Beyond that, some of the mid-sized banks, that is where we are seeing a good growth, something like a Federal Bank, AU Small Finance Bank. I think that is where one can look at for strong growth in this quarter.
Okay, all right. That's the view for banking stocks. But what about the IT names? I mean, they have been one of the key contrarian plays recently. But do you believe that the trade has already played out, or is there still upside left in those counters?
So yeah, I think IT, the recovery play is yet to happen. I think some of the stock prices have seen recovery, but there is still a lot of catch up that needs to happen, both in terms of growth as well as in terms of valuation. I think Q3, the numbers generally Q3 is the weakest quarter for tech because of the seasonality that is there. But going ahead, what we are expecting is that for the calendar year 2026, the new budgets, spending budgets in the US, that will come out. The Fed rate has cut, and that has been supportive of discretionary spending. Some of the key segments, banking, financials, BFSI, insurance, those segments are seeing some recovery in spending. What we also believe is that after last 2 3 years of heavy spending in the US in the AI infrastructure, now there could be a pivot towards AI services where some of our Indian companies are building up capabilities. For example, Infosys, HCL Tech, they are building AI-led services platforms, which could drive growth going forward. So it's a long game here. I would not say that in the near term they could consolidate, but from a 1 year plus, which is a 2 to 3 years perspective, the sector looks very attractive in terms of valuation and growth potential. So some of our top picks there, as I said, Infosys, HCL Tech within the large cap space is something that we like in terms of risk reward and valuation perspective.
All right, Infosys and HCL Tech. What about FMCG? I mean, if you look at the Q3 provisional updates, Godrej Consumer, Dabur, Marico, all of them have been showing early signs of growth revival. Do you believe that is it time to revisit the sector, or does valuations still remain a concern point for you?
I think very selectively, some of the companies that have reported strong numbers could be looked upon mainly from a steady growth or a consistent growth perspective. Because, as you rightly said, valuations have been high, and in this market, we have seen that high value stocks have not performed, and even a slightest of miss or disappointment has led to a sharp punishment. So pretty clearly, some of the selective stocks that we like, Marico had come out with strong business updates. I think the stock has consolidated a lot. That could be some upside there. Tata Consumer is something that we like a lot. Again, the stock has consolidated a lot. Valuations, although a bit on the high side, but the growth expectations is a steady around 20% earnings growth for this year and next year. That should lead to about a decent 15-16% upside for Tata Consumer. I think jewelry companies that have reported very strong numbers, and something that we like is Titan. Much better. We were expecting a strong Q3, but the business updates have been even stronger than our expectations. I think one can look at Titan as well from the overall discretionary spending side as well.
Okay. But Siddhartha, apart from Titan, we are seeing good traction in Kalyan Jewellers or Senco for that matter. I mean, does that make you quite positive on the jewelry segment, given the kind of strong double-digit revenue growth they have seen for the third quarter business update?
Yeah, I think as we said, Q3, the demand for the gold business has been pretty strong. Led by the festive season. B, I think the surge in gold prices that has also brought in a lot of investors into the gold and jewelry as an investment as well. So within the three, I think the best choice would be Titan. We definitely have a positive view on Kalyan as well as Senco. But I think these are so if you see Kalyan, they had been reporting consistent numbers for the last 2 3 quarters. Valuations is still at a discount. But these are a bit of a higher risk stocks, given that their execution capabilities and consistency that needs to be seen for the next few quarters to be to have a strong positive view. But as I said again, Senco last 2 3 quarters had been a pretty weak quarter. This is the first quarter where they have the business updates have been pretty strong. Growth has largely been led by new store additions. Same store sale growth needs to see that consistent growth. So again, within the jewelry space, yes, we are positive, and we like Titan. Kalyan is something that we have been liking. Senco, we currently have a neutral rating.
Okay. Now, apart from this sectors we have discussed, anything else that you're watching out from the December quarter? We discussed IT, oil and gas, and even FMCG for that matter.
So yeah, I think one sector that we have not discussed and which looks interesting is the capital goods space. Q3 will see strong execution pickup, and that could lead to strong growth in some of the specific names. For example, Larsen is something which has seen consistent growth both in order book as well as in execution. Some of the defense names is seeing strong traction, and generally H2 is much stronger. And with the rising geopolitical issues globally, we believe that the government focus on spending in the upcoming budget could remain strong for the defense space. So companies like BEL, Bharat Dynamics, I think those stocks could continue to do well in this quarter as well. So Larsen, BEL, Bharat Dynamics, these are some of the capital good names that one could watch out for from a Q3 perspective.
Okay. All right. Just one last question before I let you go, Siddhartha. I mean, we've seen the geopolitical tensions emerge, and of course, we've seen Donald Trump saying that the Venezuela could see about $50 million worth of oil could be given to US going ahead. I mean, how big of a geopolitical risk do you see it for India? Because overnight we did see Venezuelan stock markets also doing quite well in just a single day session. Do you believe that this could actually mean positive for India going ahead, or how do you see this to pan out?
So yeah, I think the global markets are looking at this as a much positive development, given that there has not been any war front, at least in Venezuela. They have just gone and taken they've taken out the president out of it, and they want the policies to be favorable. So I think what will happen is, or what may happen is that the supply from Venezuela, the crude oil, the energy supply from Venezuela, that could lead to a supply increase in global supply. That is positive not only for India but the global consumer markets, including US, to keep the cost low. With the pressure on India not to buy oil from Russia, I think this opens up a lot of supply from Venezuela in the coming months. And I think the world global equities are looking at this event much more positively. Even as you rightly said, the Venezuelan markets are up about more than 50% in last 2 days. So investments, US investments getting into Venezuela, the supply getting increased, one new source of crude, or you can say energy, opening up for countries like India. I think that is a big positive from an economic standpoint for India.
Okay, all right. All right, on that note, we have to let you go, Siddharth, but thank you so much for your time and joining us.
Thank you so much.
All right, let's take a quick check of the markets, because if you look at Nifty, that remains sideways as of now. Nifty has seen a decline of about 0.2%, still below that 26,150 odd levels. On the other hand, the broad end of the markets, the small caps look at a better picture, outperforming the benchmark given that it is flat but with a positive bias. And among the sectoral index, it's the IT and metals which has seen a good amount of buying interest as of now. And of course, consumer durables have also been doing well. But yes, if you look at the market breadth as of now, definitely the market breadth looks a little better, because the advances have taken an upper hand as of now versus the declines as of now. But yes, we'll watch out in the second half of the trading session whether the market sees recovery or it's going to remain stagnant like it has been for the past couple 2 days for this week itself. But for now, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we'll understand how the market is developed with our experts. We'll also be discussing individual movers. But until then, signing off, and do stay tuned to moneycontrol.com.